Welcome to Asia Stonks. This is a special series where we would share some of the trade ideas that we may have. Note that we are just listing down our thoughts, and this is not financial or investment advice and should not be construed as any form of advice. China announced a major policy shift yesterday. The Chinese government has loosened restriction on childbirths and now allow couples to have 3 children after ending their one-child policy in 2016. Some are skeptical on the effectiveness of the policy since the 2016's two-child policy did not prove to be that effective, and underlying cause of lower birth rates could be due to various other reasons including high living cost, stressful environment, dual-income couple with caretaker issues and more. That said, stocks usually move ahead of time and anticipation as well as on sentiment. Chinese milk producers like China Mengniu with the ticker 2319HK was up 3%, and Health and Happiness with ticker 1112HK was up 5%. The news was announced after Australia markets were closed, and as such A2M has yet to price in this policy. It's noteworthy though that there were headlines that A2M was hit by class action news yesterday, although the company came out to clarify that it is not aware of any legal proceeding being filed. The class action suit relates to Slater and Gordon investigating a possible claim on behalf of investors who bought shares between the 19th of August 2020 and the 7th of May 2021, when the company posted 4 downgrades leading to the stock price falling over 60%. Slater and Gordon alleged that A2M may have engaged in misleading or deceptive conduct which goes against the Corporations Act. However, the stock was only down 0.3% yesterday, and that may imply that no one is taking the legal issue seriously just yet. Fundamentally, A2M remains unloved as it's hit by the collapse of Daigou sales given travel restrictions as a result of COVID-19. As such, we'd put on a tight stop loss on this in case the trade doesn't pan out as we expect. Due to the multiple earnings downgrades, short sellers have been piling strongly on this name. An estimated aggregated amount of 45.4 million shares were shorted in the name. Note that the stock only trade around 5.8 million shares on average. It means that the short sellers would have to take at least 7 days to clear out of their whole position, and that's assuming they would be 100% of volume of market every day, which they usually would not, as it would impact on the prices heavily. While we do not think that the short sellers would cover their whole position as travel restrictions still are acting as an overhang on Daigou sales, we think that there may still be some covering as short sellers take some profit. In short, this name is subjected to potential short squeeze if short sellers rush to cover. In summary, we would go long A2M. The trade thesis are as follow. 1. China birth policy loosening likely benefit milk producers, and the Hong Kong milk producer stocks already rallied yesterday. 2. Stock may be short squeezed as a result of positioning. The following would be how we handle risk management. Stock closed at 5.52 Australian dollars yesterday. We'd consider go long here with a -3% stop loss given that the daily standard deviation of the stock is around 3%, volatility of 47% in a year. We will target to take half of profits at next resistance level at around 7 Australian dollars and let the remaining profits run to 8.3 Australian dollars if that happens. In any given day where the stock reverses and falls by more than 3%, we will liquidate them all, as that may mark a retracement back lower. All the best out there if you are trading today. That is all for today's special. If you have enjoyed the content, hit the like and subscribe button so that you will not miss out on any market moving news or the trade ideas that we may have.